Hello everyone, my name is Ryotaro Nakayama, President and Representative Director of Makuake. Thank you very much for taking the time out of your busy schedules to attend our financial results briefing for the third quarter of the fiscal year ending September 2025. In my presentation today, I will first explain our third quarter performance and key KPIs, and then based on that, I will provide a detailed explanation of our full year earnings forecast for this fiscal year and our future strategies moving forward. Without further ado, let me begin with an overview of the third quarter. First, regarding our business performance, in the third quarter of this fiscal year, our total transaction volume increased by 17.2% compared to the previous quarter, reaching 4.88 billion yen. This performance is ahead of our forecast, and a major factor behind this achievement is our continued success in generating large-scale projects, particularly in May and June. The number and unit price of large-scale projects exceeded our expectations, making this a quarter of significant growth. As for net sales, in addition to the increase in total transaction volume, growth in ancillary services, particularly advertising delivery agency, drove results, leading to a 21.4% increase from the previous quarter, reaching 1.29 billion yen. As for SG&A expenses, in addition to an increase in commission due to higher total transaction volume, there were also increased development costs and higher personnel expenses resulting from investments in human capital management. These expenses rose by 23.1% from the previous quarter, reaching 800 million yen. However, since net sales progressed above plan, operating profit for the third quarter was 150 million yen, and cumulative operating profit for the current fiscal year has already surpassed the full year earnings forecast. In response to our solid business performance, we will make an additional upfront investment of approximately 50 million yen in the fourth quarter in order to accelerate the achievement of our medium-term management targets. Our KPIs are also showing very strong progress. The number of active projects during the month increased by 5.4% compared to the previous quarter. In addition to the sales team focusing on acquiring new high-quality projects, our continued participation in and hosting of various offline events has steadily laid the groundwork for further increases in the active project count in the future. Furthermore, regarding the monthly project unit value, initiatives such as maximizing the amount of support pre-orders on the first day, promoting the use of coupons issued by project creators, and focusing on the growth of large-scale projects have proven effective, resulting in a significant increase of 11.2% compared to the previous quarter. Since this includes the impact of some large-scale projects, we expect this high growth rate to stabilize going forward. However, our initiatives to enhance our support capabilities are beginning to translate into tangible results for the projects. As a result of these efforts, the monthly support pre-orders amount has also grown significantly, increasing by 17.2% compared to the previous quarter. In terms of progress toward our medium-term management plan, our performance in the third quarter has been steady relative to the full-year forecast for the fiscal year ending September 2025, and we are also making solid progress toward our targets for the fiscal year ending September 2027. Furthermore, new services in the plan and growth domains, such as Makuake Insight and the Makuake store within various malls, have already achieved a stable launch, and our strategic foundation is steadily being established. As for the external environment, the situation remains challenging. Although there are signs of stabilization in currency fluctuations, the weak yen persists, and due to high raw material costs and soaring shipping fees, we believe that the environment for new product creation in the manufacturing industry continues to be difficult. In addition, due to the US tariff policies, we believe that it continues to be difficult for businesses to make plans. Furthermore, due to the impact of rising prices, consumer spending sentiment was at a 5-year low for the third quarter, with a clear shift in priority towards daily necessities. Even in such a challenging environment, the fact that our company was able to achieve steady growth suggests that the underlying strength of our business is improving. Now, I would like to take a closer look at each of the figures. As for GMV, it reached 4.88 billion yen in the third quarter, representing a 17.2% increase compared to the previous quarter. This significant progress beyond our plan can be largely attributed to our ability to continuously generate large-scale projects, particularly with major corporate clients, in May and June. On the other hand, even if we exclude the exceptional results from large-scale projects, we believe that this steady growth indicates that the underlying strength of our service itself is steadily increasing. However, as a result, our actual performance slightly exceeded this underlying strength. Net sales increased by 21.4% compared to the previous quarter, reaching 1.29 billion yen. This was due not only to the increase in GMV, but also to the growth of ancillary services, particularly our advertising delivery agency service. Both net sales and take rate have shown steady growth for 5 consecutive quarters, with the second quarter of the fiscal year ending September 2024 marking the bottom. This demonstrates a healthy growth trend. The take rate reached 29.2% due to the expansion of sales from ancillary services, representing a 5.8-point increase compared to the same period last year, and profitability is steadily improving. Gross profit increased by 18.2% compared to the previous quarter, reaching 950 million yen, which is a 43.8% increase compared to the same period last year. The gross profit margin settled at 73.9%. However, due to the occurrence of one-time outsourcing costs related to project generation and the increase in advertising agency sales and their advertising effectiveness, it decreased by 2.0 points compared to the previous quarter. Currently, an increase in advertising agency sales tends to lower the gross profit margin, but as advertising effectiveness reaches a certain level or higher, the profit margin is structured to improve as well. SG&A expenses increased by 23.1% compared to the previous quarter, reaching 800 million yen. Compared to the same period last year, this is a 17.4% increase. The main factors are the increase in commission due to higher GMV, increased development costs, and greater investment in human capital management. Although the number of personnel has decreased, we have successfully improved productivity as a result, and we have also been able to continue efficiently managing investments and costs separately. As a result, operating profit reached 150 million yen in the third quarter alone, thanks to increased net sales and effective management of SG&A expenses. Compared to the operating loss of 15 million yen in the same period last year, this represents an improvement of 170 million yen. Our YTD cumulative operating profit has already surpassed the full-year earnings forecast. Although our YTD cumulative operating profit has exceeded the full-year forecast, we have not revised our earnings forecast, as we plan to increase investments in human capital management and in areas such as AI during the fourth quarter, with an eye toward achieving our medium-term management plan ahead of schedule and strengthening the foundation for future growth. Regarding the status of our most important KPI, the number of active projects during the month reached 1,030 in the third quarter, representing a 5.4% increase compared to the previous quarter. This growth is the result of new acquisition initiatives by the sales team and efforts to strengthen repeat business by curators, and we are now seeing an upward trend. Although the monthly project unit value is greatly influenced by large-scale projects, various support measures, such as maximizing the amount of support pre-orders on the first day of a project, promoting the use of coupons issued by project creators, and focusing on the growth of large-scale projects themselves, have proven effective. As a result, the unit value reached 1.54 million yen, showing a significant 11.2% increase compared to the previous quarter. Compared to the same period last year, this represents a substantial 32.3% increase. On the other hand, these figures are significantly affected by the impact of very large-scale projects. So while the numbers themselves have been boosted, we believe the results are higher than initially expected. As a result, the monthly support pre-orders amount reached 1.59 billion yen, a 17.2% increase compared to the previous quarter, marking significant growth. This also represents a 16.5% increase compared to the same period last year. Next, I would like to introduce some noteworthy projects that emerged in the third quarter. First, among project creators of small and medium-sized enterprises, many purchases were made of gadget products equipped with AI and IoT features, as well as space performance products, which have been attracting a lot of attention in recent years, so-called space perf products, and high-performance items tailored to individual lifestyles. Additionally, service-oriented projects that allow people to experience world-renowned gourmet cuisine, such as vouchers for a sushi restaurant run by a Michelin-starred Chinese chef, continue to appear. The fact that tickets for such establishments are selling well highlights a unique aspect that sets us apart from ordinary e-commerce, in my opinion. From large-scale corporations, we have seen the launch of many products closely tied to everyday life. One particularly noteworthy example is Kirin Beer's new service project, Whiskey to Live Life Together. This project reached 100 million yen in support pre-orders in just 4 minutes after its launch, setting a new record for the fastest in Makuake's history. Over the 20-year aging period, supporters will regularly receive samples of the whiskey as it matures. And in the 20th year, they will receive the fully matured whiskey. This story-driven concept resonated strongly with Makuake users, leading to a complete sellout of stock on the very first day. By the end of the project, the total amount of support pre-orders exceeded 270 million yen, generating a tremendous response. In this way, the combination of major corporations' brand power and the strength of the Makuake platform is creating new opportunities for innovation and delivering significant results. We continue to feature numerous projects related to the SDGs, and this time, in the midst of the recent rice shortage that is still fresh in our memories, we supported an initiative that demonstrated the potential for a new form of agricultural distribution, such as a subscription-based annual pass for direct delivery of Akita-grown rice from farmers, ensuring a stable supply of rice. This project contributed to the challenge of sustainable agriculture, and we found it both fascinating and worthwhile to support. Additionally, as a topic of note, we achieved new records in this third quarter. The first is that, since the launch of our service in August 2013, we announced that the number of sake breweries in Japan that have worked with Makuake has surpassed 400. This represents about a quarter of all sake breweries nationwide. Across Japan, many breweries face challenges such as the declining interest in sake among younger generations, a shortage of successors, and the need to pass on traditional techniques. Through Makuake, these breweries are taking on new initiatives. The number of projects in the sake category has reached 700, with the gross amount of support pre-orders exceeding 800 million yen, and the number of supporters surpassing 80,000. I believe this serves as one proof that our platform is contributing to the preservation and revitalization of traditional Japanese culture, and I am very pleased about that. Another example is Kirin Beer's whiskey project, which I mentioned earlier. We also actively held offline networking events. For the first time since the COVID-19 pandemic, we hosted the Makuake Challengers Meetup 2025, an event where project owners from all over Japan gather together, an event that had been suspended during the pandemic. Through presentations on our company's future direction, talk sessions, themed interactive sessions, and social gatherings, project owners from various industries were able to learn from each other for the growth of their businesses. By building new connections, we aim to further expand the chain of challenges, and I believe we can say it was a success. In addition, we held a 3-day limited pop-up store called Makuake Gadget Special Days within the premises of Yodobashi Camera in Akihabara, where people could actually experience and purchase gadgets originating from Makuake. 19 participating companies set up booths, and by providing visitors with opportunities to try out gadgets during and after their project launches, we supported the further growth of the project owners and contributed to the development of the gadget genre. We also worked to enhance our company's brand strength. We also announced the launch of a new service, Makuake Insight, which will play an important role in our future growth strategy. This is a research service that visualizes new product trends and customer insights. From the new product planning and development phase before a project is launched, to the formulation of general sales strategies and planning for the next product after a project ends, we will provide the necessary support through 2 offerings, a data dashboard and surveys for Makuake supporters. In this way, we can strongly empower our business partners' decision-making. Next, I will explain the full-year earnings forecast for the fiscal year ending September 2025. At the time of the second quarter financial results announcement, we revised our forecast upward and are now aiming for net sales of 4 billion yen and operating profit of 310 million yen. The third quarter has also continued to perform steadily, with cumulative net sales so far reaching 3.34 billion yen, which is 82.9% progress toward our full-year plan. Furthermore, cumulative operating profit has reached 420 million yen, which already exceeds the full-year operating profit forecast of 310 million yen by about 35.5%. The creation of large-scale projects in the third quarter boosted our net sales, resulting in profits that exceeded our forecasts. On the other hand, our company places great importance on the early achievement of our medium-term management plan and on strengthening our foundation for further future growth. In addition, in order to properly execute the investments that were delayed in the first half and third quarter, as well as to make strategic upfront investments for growth in the next fiscal year and beyond, we have not changed the full-year earnings forecast announced at the beginning of the period at this time. Specifically, in addition to the 40 million yen in additional investment costs for the second half included in the earnings forecast announced on April 22, 2025, we plan to make an additional upfront investment of approximately 50 million yen, focusing on management training utilizing external professional talent and the development of AI infrastructure. The purpose of these investments is to advance the structural reform of our company and business, and to solidify the foundation for corporate growth in the next fiscal year and beyond. As for the remaining business strategies for the current fiscal year, in the Makuake business, we will strengthen stable operations by acquiring projects from high-quality project owner and reducing the impact of seasonality. At the same time, we plan to solidify our revenue base so that we can expand the scale of revenue from ancillary services in the next fiscal year and beyond, while also ensuring solid full-year performance results. At the same time, we will also begin implementing various new initiatives to significantly enhance the ability of businesses to sell new products and services, such as strengthening our support for business growth by utilizing Makuake Insight, which we recently announced, to assist business operators. Regarding the medium-term management plan for the fiscal years ending September 2025 to September 2027, which is described from page 21 onward, the content has already been shared in the second quarter earnings briefing video. Therefore, we will omit a detailed explanation in this video, but we believe it contains very useful information for understanding our company's medium to long-term strategy. Please be sure to check it out via this QR code or the URL in the description below. We hope that by watching the video on our medium-term management plan, you will be able to more concretely envision the company we aim to become in 3 years and the growth image we are striving for. Thank you very much for your attention. Lastly, as I mentioned in the first half, we believe this was a quarter in which we made greater than expected progress in reforming our profit structure. On the other hand, as I also mentioned, there are still many challenges to be addressed in order to better capture the needs of business operators. However, we are steadily executing our medium-term strategy toward that goal. And we aim to establish a unique and original position in the vast retail distribution market, one that existing players have not been able to achieve. This will allow us to evolve from a company that simply maximizes a new product's debut to a long-term growth partner for our creators. We aim to take new steps toward creating a world where worthy things can come to be, grow, and endure. We hope you will look forward to and support the unique game-changing initiatives that have been difficult to achieve in the retail distribution market until now. We sincerely appreciate your continued support.